Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. This episode may turn out to be the most important one of this entire AMC saga because we're going to logic map everything that can happen right up to the time window we will discuss on the next screen. By now I'm sure you've heard AMC will report its results for the fourth quarter of 2023 on Wednesday, February 28th after the bell. Okay, just to refresh your memory, on February 28th, we've got our earnings call for the fourth quarter of 2023. On March 1st, Dune Part 2 drops in the theaters. On March 11th, the FRB ends the Bank Term Funding Program. On March 15th, we have Triple Witching Expiration Day. On March 19th and 20th is the FOMC meeting with a new focus on balance sheet runoff. Now, after two consecutive profitable quarters, TipRanks is of the opinion we're going to lose 55 cents per share, which is still a huge improvement over Q4 of last year, which was a loss of 2.29. My subscribers know that Uncle Frank believes the shorts will never cover unless they're forced to, because for some or all of them, it may turn out to be a catastrophic event like it was for Archegos and Credit Suisse. I also believe we will never beat the hedgies, no matter how good AMC performs, because they cheat. The regulators let them cheat, and AMC senior management is actually helping them navigate their way out of a very precarious short trade. Uncle Frank also believes a time window is shaping up between March 11th and 20th. I further believe that if a swan were to land in the midst of all these challenging events, it could result in a crisis for our enemies, forcing them to address the massive and what I believe are illegal positions against our stock. This is not financial advice, and I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. Now, let's first discuss the best possible outcome. We have an amazing earnings call for Q4 on Wednesday, the 28th. We remain profitable and surprise again to the upside. Aron and Investor Relations report all kinds of good news and positive developments for the quarter and the year. Adam announces no more dilution until 2025. The stock rallies on the great earnings call the following day, Thursday, and this is immediately followed by a huge turnout for the weekend for our first blockbuster of the new year, Dune 2, and all this gets AMC trending again and the stock moving in the right direction, possibly even attracting new buyers and some short covering, right? Then a swan lands in the middle of the time window on your screen and forces a short covering event, ideally one that gets out of control, right? The hard truth is, instead of complaining about the stock price in tweets and pretending the ape, its conversion, the reverse split, and the constant threat of dilution isn't the real reason the stock is down, all Adam has to do is make a simple statement. No more dilution until 2025, and I believe the stock would miraculously recover. Now, this may be hard to hear, but the real truth is, without the ape, this stock would have squeezed long ago, in my opinion. The short trade against it was unsustainable, especially with the cost to borrow fees over 1,000%, and only God knows what the true short position against the stock really is. Wall Street desperately needed the ape, its conversion, and the reverse split, and Adam, Derek from Citi, and Phil from Morgan Stanley gave it to them. It's just that simple. If you can't see that now, it's because you simply don't want to. Now, I always hope for the best, but prepare for the worst. Adam has destroyed more rallies than I care to remember with awfully timed tweets about bankruptcy risk or dilution announcements. So based on his history, let's prepare a logic map to see if we can forecast when and what's going to happen if he plans to do it again. Let's assume we're going to have a great earnings call due mainly to our new distribution business, which featured the Beyoncé and Taylor Swift concert films. After all, the Eras Tour was officially the highest grossing film in box office history among concert and documentary films, with more than 261.6 million earned globally. AMC was not only an exhibitor, but a distributor of these films. So here are the potential scenarios. Adam will destroy the rally before the earnings call. Or number two, Adam will destroy the rally during the earnings call. Or number three, Adam will destroy the rally after the earnings call. Now, based on our last call, which was the best third quarter in our 103-year history, which includes pre-pandemic 2019, something Wall Street said we would never do again, Adam never mentioned his dilution plans during the call. He waited until the morning after, pre-market, to drop the shocking news. Even though he had over $700 million in liquidity, he insisted on swapping stock for debt at near historic low prices. So what's your guess? If Adam does plan to skunk any rally we may get, and assuming it's a great call, will he do it before, during, or after the call? Leave your answer in the comments. The next obvious question for our logic map is how will Adam choose to destroy a potential rally this time? There's always his favorite, another unnecessary dilution announcement and transaction at ridiculously low prices. From Yahoo Finance, AMC stock tumbles as company files to offer $350 million in stock. Or will he focus on how bad the current quarter will turn out due to the writers and actors strike? From The Street, AMC's CEO attributes the theater chain's share price decline to industry challenges, including the Hollywood writers' strike. Or on Topic, he could add that the industry is expected to have a worse year top line than last year and will not achieve pre-pandemic levels until 2026 or even 2027, like recently forecasted in the press. From The Hollywood Reporter, global cinema admissions won't rebound even by 2027, though revenue will, PwC forecasts. Or maybe Adam will let a short seller or put holder against AMC do the dirty work for him. Maybe our own investment banker, Citi, the guys who planned the conversion and reverse split Adam signed off on, will trash us again with yet another sell reiteration and slash its price target for our stock for the 20th time. From MarketWatch, Citi cuts AMC price target to $475 from $1550, reiterates sell rating. But what if it's something we're not expecting? What if before, during, or after the call, Adam hints at another reverse stock split if AMC's stock price continues to falter? Can he really do that, Uncle Frank? Let's discuss it. Before we discuss another reverse stock split, I want to go on record about the first one. We never needed it. We were in no danger of being delisted by the exchange. Adam never gave us a good reason for it because there wasn't one. It was what Wall Street needed, and it was planned in our boardroom for short sellers of our stock, by short sellers of our stock. Those are facts, not FUD. What did Adam say when he was pushing the reverse split on us? Do you remember the tweet? In your comments, Some fear that after a reverse split, short pressure could cause the price to go back down. But you neglect that it's every bit as easy to short a stock priced at 3 as it is on a stock priced at 30. I completely disagree. A reverse split itself has nothing to do with any subsequent prices afterwards. Well, to verify my claim that we were in no danger of being delisted in any way, I offer this comment from the street. The New York Stock Exchange also requires listed companies to maintain a share price of at least $1, although a company's share price must be over $4 to be listed initially, a market cap of at least 15 million, and have at least 400 unique shareholders, among other criteria. We were in no danger of being delisted, not by a long shot. So, Uncle Frank, what if Wall Street, Citi, and Adam are planning another reverse stock split like they did to Mullen and others? What would have to happen? Well, remember, we're a Delaware corporation, so let's read the laws and rules from that state. Now, this article is from Harder, Seacrest, and Emery, and you have to understand that there were so many companies in danger of being delisted, they began to complain to the state and the courts that the process was too hard and took too long. So the state responded. Approval of reverse stock splits and adding authorized shares may become easier. Before we dive in, you should know for a regular split, they don't even need to ask the shareholders. They just get the approval from the board and it's done. Forward splits. Further, under the amendments, a Delaware corporation is no longer required to seek stockholder approval to amend its charter to effectuate a forward stock split and proportionally increase its authorized shares, so long as the company has only one class of stock outstanding and is not divided into series. Now, back on topic from the article. With continuing downward pressure on the stock prices of small and micro-cap stocks, some public companies may find comfort in recent changes to the Delaware General Corporate Law, DGCL, and proposed changes to the NASDAQ listing rules that could make it easier to obtain stockholder approval of and effectuate a reverse stock split or increase its authorized shares. The attorneys begin with changes to Delaware voting standards. Generally, to amend a certificate of incorporation, a Delaware corporation must obtain 1. Approval from its board of directors, 2. The affirmative vote of holders of at least a majority in voting power of the outstanding stock entitled to vote on the matter. Remember that part, entitled to vote on the matter. On August 1st, 2023, a number of amendments to the DGCL became effective. The amendments reduced the default stockholder voting standard required for a company incorporated in Delaware to effectuate certain amendments to its charter. Okay, this may be good news for a company in danger of being delisted, but not for a company like ours. The article continues with an example. Let's assume a Delaware corporation is seeking approval for a reverse stock split. It has 1,000 shares outstanding. 600 shares vote on the reverse stock split proposal. Under the entitled to vote standard, as a majority of those entitled to vote, 501 shares would have to vote in favor of the proposal in order to pass. The company would need 83.5% support from those that voted in this scenario. Under the votes cast standard, more shares must vote for the proposal than against the proposal, or as few as 301 shares for the proposal in this scenario in order to pass. The company would need 50.1% support from those that voted. This reduced voting threshold is expected to make it easier for Delaware corporations to receive stockholder approval for reverse stock splits and increasing authorized shares, both of which can be necessary for capital formation. Okay, so if Adam does want another reverse split, we've learned he'll need to face a shareholder vote, but it will be easier for him under the votes cast standard. Now, subscribers to this channel know that Adam, his entire management team, and the entire board of directors haven't purchased a single share of AMC over the past 6 years and sold nearly $1 billion worth on the open market. The good news is Adam, senior management, and the board currently own very little AMC stock, less than 0.5% or 0.28% to be precise. The bad news is the 2023 stock bonuses are about to be handed out, and as you know, they are very generous to themselves with our equity. Could these newly issued shares be used to vote for another reverse split? Now remember, AMC has been accused by many apes of rigging the shareholder vote when it came to ape, its conversion, and reverse split. Here's an email from our chief investment banker from Citi, Derek Van Zant, to Adam Aron and Sean Goodman, our CFO. He sold over $17 million in AMC stock over the past few years. Not bad money for a CFO, right? Anyway, I will read excerpts from the emails, and you decide if Antara was given stock at a great discount in exchange for their vote to support Citi and Adam's plan for APE. Adam and Sean, attached is a preliminary ownership and vote analysis based on various investment scenarios with Antara. We need to confirm their existing stake size, but are assuming 60 million shares for now. We probably need to discuss size considerations relative to 20% threshold with your lawyers and any governance and control implications. I am talking to Antara at 2 p.m. Eastern Time to connect following yesterday's lunch. Signed, Derek. Now, this is another email from Derek. Just spoke with Himanshu. That's Himanshu Gulati of Antara. He was very positive on yesterday's meeting. They want to proceed, but are limited to 150 million in size due to risk limits, but believe they can stretch it to 190 million with the repurchase of their 100 million face of 2Ls at 40. Those are bonds. He is willing to allocate value to the bonds to provide a higher A price, but we'll need to think this through. 190 million purchase of apes at 20% discount. AMC purchased their 100 million 2L notes at 40. Here it is. AMC commits to proceeding with vote. Antara agrees to hold shares until vote and vote in favor. He wants AMC restricted from selling more apes until after the vote, including converts. Restriction lifted if ape is greater than 3. Wants participation in 8K and press release. Now, guys, Adam sold us the ape saying, hey, this is all about raising money. I don't hear any raising money here for the company. All I hear is about the vote. This is a discussion only about the vote. Does this sound like people have your best fiduciary interests in mind? I'll leave it up to you. Now, here's an 8K from January 2nd. Between December 28th and 29th of 2023, AMC has entered into a series of privately negotiated exchange agreements under which it has issued or will issue an aggregate of approximately 3.2 million shares of the company's Class A common stock in exchange for 22.5 million aggregate principal amount of its 10%/12% cash/PIK toggle second lien subordinated notes due 2026. Okay, so we know we're exchanging stock for debt. We're pushing out maturities. Okay, the terms of the bonds we're paying down or off seem familiar. Is that Antara again? It doesn't say. Remember the last time we gave unregistered stock to Antara at ridiculous all-time low prices? We let them out of their lockup period early. Antara made so much money so quickly, they were sued and were forced to return some of the profits. Now, is there a lockup period on this exchange, on this stock? Is Adam putting stock in the hands of people sympathetic to his cause at very low prices, historically speaking, again? Maybe you could email John Merriweather at AMC and ask who exactly owns these bonds we're swapping stock for and how long do they have to hold the stock, because he won't answer my emails. So here's the email I sent. John, we know we're swapping stock for debt. Who are we doing these transactions with? Is this on Tara? Who owns these, John? 10%/12% cash/PIK, toggle second lien subordinated notes due 2026. We know the shares are unregistered, but do they have voting rights? Is there a lockup period on the shares? When can they sell them? Respectfully, Uncle Frank. And if you guys want to email and ask, maybe he'll answer you. It's investorrelations@amctheaters.com. But watch out for that tricky spelling of theaters. It's Theatres. To sum it up, I don't think we're in any immediate danger of another reverse split. I don't think whoever swaps stock for debt with us would be too thrilled with the idea either, especially since the price has dropped even further since then. But I am interested in what you think is going to happen the end of this month when we have our call. Now remember, we're making the assumption we'll have great results and a surprise to the upside. So I'll ask you again. Will Adam destroy the rally before the earnings call, during the earnings call, or after the earnings call? I also want to know how you think Adam will destroy the rally. Will it be more dilution? Will they have Citi put out another sell rec and price target cut on us? Will Adam blame Hollywood or the strikes? And even though I don't think there's much chance of a reverse stock split at this time, I do think Adam may float the idea. He may say something to the effect that if the stock continues to fall, he may have to consider another one to avoid being delisted. Please put in the comments what you think. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.